All right. Hey, everybody. Dan Fitzpatrick here at stockmarketmentor.com. I just finished teaching an hour session for our subscribers on the first deadly mistake that traders make, and that is trading without a strategy. So, guys, if you're a member, definitely check it out. This is a really, really important thing for you to know. And if you're not a member, here's how you can get that information without joining as a full-time member. Hoodwink me. Sign up for a free trial. It's $7, which is close to free. Sign up for a trial for 14 days. Then you can watch the video. And then after that, you can say, ha, got one over on Dan. And then you can cancel. Okay, so you got a free tutorial for $7. But my bet is, of course, I don't think you're going to cancel. So I'm actually hoodwinking you. One way or another, one of us is going to get hoodwinked. So, all right, I want to look at Enphase today. One of our venerated members, gee whiz, brought this up to me just as we were leaving. This is not my typical type of a trade, but it is a trade, and I think it's a really good one. So, solar, all these stocks have been absolutely crushed, but they're starting to move again. And Enphase is in a really good spot here. So this has been a kind of a classic institutional accumulation phase right here. Then the company reports earnings that were better than expected. Still pretty crappy, but they're better than expected. And so what happens? The stock pops up here on earnings, massive volume for this stock, 50 million shares traded. That's like 5 times what the normal volume is of 9 million shares. So this is massive volume. The stock did not gap and crap. It drifted around here a bit, and then it pulled back for 3 days. 4 days if you want to be anal retentive, but really just 1, 2, and then 3. And now it's running up here. So this is actually a pretty good trade, a defined risk trade. You can be buying this stock right here, and you can be looking at setting an exit. You don't even have to play around with the 50-day moving average. If the stock falls below these last intraday lows, that would kind of be enough if you want to really, really play it tight. But since it is this close, you put your stop down here around 4160, 4170, you're risking 8%. If the stock doesn't continue higher from here, I wouldn't make this trade. But if it does continue higher, this could be a pretty nice trade for you. You get another 10% on the upside pretty easily. So anyway, it's just an easy trade for you, at least easy to understand. Hopefully it'll work out. That'll make me look really smart, and it'll make you some money. So we'll see what happens. And by the way, again, go ahead and hoodwink me, man. $7. I won't know when you cancel. I don't track that kind of stuff. Karen does, okay? All right, guys, I will see you all next time.